Good evening. This is Brian Shannon from Alpha Trends Blogspot. Today is Monday, the 11th of December, 2006, and we're going to take a look at some stocks for trading on Tuesday. Now, we've got the Federal Reserve meeting tomorrow, so it's going to be probably a pretty quiet day, but we can still look for some opportunities here. First, let's take a look at Amazon, AMZN. I've got on the screen right now. Stock has pulled back pretty deep here, deeper than I would have thought after that first initial rally that seems to have trapped a bunch of shorts with this move below, this gap below here, and then the subsequent recovery. Let's take a look at the weekly time frame. You can see that a little better. We had big bearish move below here, rallied back above, and trapped a lot of those bearish players in there. Now it's pulled back to the rising 10-week moving average, which is right here, this 50-day moving average, right around in that area. And a lot of times the stocks do find support near there. So let's take a look at where we have the potential for entry and hopefully be able to make some money as well. We're looking at a half-hour chart right now. Each candle represents 1/2 hour. So you can see that it's had this series of lower highs and lower lows for the last couple weeks, but it started reversing that trend in here just over the last day or two. So we've got, looking at a 10-minute time frame now, we've got the stock back above the rising 5-day, or actually the flattening out 5-day moving average. I think that the play in here is to buy it above $39 a share. Our stop could then go just below this level right here, which is $38.60, so about 40 cents a risk. And I'm looking for the stock to conservatively move up to about $40.25. I think it could probably go higher than that, but we do have options expiration this week, so I think there's going to be some pressure around that 40 strike. So we'll look for risking 40 cents here with this stop and the potential to make $1.25 on the upside in Amazon. Guitar Centers, GTRC, here's got a great looking daily time frame, broke out recently past some resistance and above that 200-day moving average. We've got the 10 above the 20, above the 50. It broke out. It's pulled back on diminishing volume. That's a bullish sign. Looking at the weekly time frame, you can see it looks like it still has some room to run on the upside. I think in here, I'd like to be a purchaser of the stock above $46.55. I'd set my stop below the afternoon low here, so at about $46.08. That'd give us 47 cents of risk. And on the upside, what I think we can potentially see in here is the stock rally up towards the $49 level. So about 47 cents of risk and maybe $2.45 of potential reward. We could actually even lower that target a little bit, I think, down to about 48.50, still keeping us within a very good risk-reward ratio and giving us a good reason to enter that trade. Pepco Holdings, symbol POM. It looks kind of like a kind of slow New York Stock Exchange stock, but it does have a very nice pattern here, starting out with the volume first. Nice increase as it rallied the last week and a half, and diminishing volume as it consolidates above this rising 10-day moving average. Looking at a weekly time frame and monthly time frame, you can see the stock hasn't been in this area since 2000. So these are 5.5-year highs or so. And on the 10-minute time frame, I think this is another straight breakout play past $26.40. Buying the stock above there, putting our stop below the midday low here of $26.24 will give us a risk of just 16 cents. And I think the stock can make it up to $27.50, and that would give us a price objective of $1.10 away for a risk potential of about 16 cents. I'm going to mention two more long stocks here at the end just to keep you interested right up to the end. One low-price New York Stock Exchange stock. And let's take a look at a couple shorts first. Dynamic Materials, symbol BOOM. I've been bearish on this one for quite a while. That is several months. And it's, we caught this decline, and we caught this decline over in here. Now it looks like it's getting to decline fresh once again. We had the stock breaking down this not this afternoon, but today. And I think that it got a little bit overdone. So I'd like to see a rally back up towards this $29.20. If we can get up to $29.20, I think you then want to sell the stock on weakness below $29 a share. And the stop can go right above this little high here, so we'll put our stop at $29.42. So 42 cents risk, and I think it's going to return to the scene of the crime here at this $27.50 level. So our objective is $1.50 away from the $29 level, a drop to about $27.50. and risking 42 cents to hopefully make that $1.50 makes a good risk reward. We've also been bearish on Form Factor, symbol FORM. And Form Factor, just to remind you what the weekly or daily chart looks like here, nice series of lower highs and lower lows. And on the weekly, it looks like it's still potentially headed for a much bigger disaster. We're only going to look for it to move down to about $35.25, which is just above these recent lows right over here. So our price target's going to come in right here. Now what I like about this one is that we tried to short it last week, got stopped out with a small loss. It looked like it was breaking out, probably trapped some longs in here, and I think now the stock is ripe. I think it's good for a pretty high probability drop down towards that 35.25 level. The way I'd like to see this one play out would be a rally up to $37.25 first, then sell short weakness below $37 a share. We'd set our stop at $37.35. Target of $35.25, like I said, would be $1.25 away, and based on the entry and stop, we would be risking about 35 cents. Now, one interesting stock that trades on the NASDAQ traded a lot of volume in here recently. And I'm not really sure what this is all about, but this is very large, volume up in here. These 12, 15 million share days for a stock. Healthion is the symbol, HLTH. MDEON, I guess is what they call it. EMDEON is this the way they spell it. I'm not going to give any specifics on this one because it looks like a slow stock, but it pulled back to the rising 200-day moving average. Now we've got this big volume going on. Something's happening. Someone seems to think there's a reason to own a lot of shares, and we're working off the supply in this area. It could be headed for a bigger breakout past this 12.5 level. So maybe not this week, but keep your eye on this one. And if it can get above that $12.5 level, and a lot of times volume does precede price movement, then it could have a much more significant rise coming. So I would say it's in a pretty low risk area to purchase, and depending on your time frame is going to depend on how you want to trade the stock or whether you want to trade it at all. The other stock is just trading under $2 a share, maybe making a little inverted head and shoulders pattern here. I don't know. I don't want to get too much into pattern analysis, but if that were the case, that would give us a target up near about $2.40. And looking at a weekly time frame of this stock, you can see it's had its problems for sure. And even on the monthly time frame, we can see it's been close to $90 a share back in 2000. So this former leading stock has seen some good volume come into it here today, particularly once it broke past this $1.94 level. That's what I think got the buyers involved. I think if you get involved here, your stop probably goes at about $1.95, and it could potentially make it up towards that $2.40 level in Gateway, symbol GTW.